overall IPO market has been on fire, and the returns have been good for investors. And the regular way IPOs are just flying off the shelf right now. So there's interest in IPOs, and in Palantir in particular, it's if it gets the deal done at about $11 price, it's going to be a $3 billion deal, the second largest IPO so far this year. It has $1 billion in revenue, is guiding toward profitability, which is good because it had shown a lot of losses, and I think that was a little bit of a concern until we saw what the outlook would be for the company. So we think there'll be interest. Our issue here is this direct listing, and that it does have challenges in going to the market in that way.
Right. You make the point that there have been some others that did not work out so well. I wonder what you think it is that is making direct listings a little more challenging, at least in the early stages.
Well, basically, it's the bargain between the buyer and the seller here. In the case of the direct listing, the company's the seller, and their idea is to raise as much capital as possible with no restrictions on insider selling. But for the buyer, they're not looking at wanting the highest price. The buyer has got to make money on the other side of this. And well, it's hard to predict exactly what will happen to Palantir. I think it's instructive to look at the direct listings that happened for both Spotify and Slack. And both of those companies, after the first day of trading, a year after their IPOs, they produce negative returns for investors. Now, I know things happen in a company's business that might be some events that could have affected that trading. But still, the trading in those tells us that there's no reason to rush into a direct listing. So we're going to see Palantir. There'll be a lot of interest. The pricing may not necessarily be as compelling as it would be for an IPO, where it has generally some kind of a discount for the early days of trading. So I think that investors, having learned from the other two, might not necessarily chase this and wait. It's interesting to note Palantir has a third of its shares that'll be outstanding will be freely tradable. So not just the registered shares on the IPO, but other options and shares that will be free to be sold. So even though there's some kind of a lockup on Palantir, there are many shares that'll be able to be freely traded.
Shepard Smith here. Thanks for watching CNBC on YouTube.